What is up, guys? I'm back with another video and got myself a cheeky bulletproof MCT oil coffee. So I thought I would just jump on the charts today and break down a few of my October trades, some winners, some losers. I know a lot of you guys have been asking how October was. It was pretty wild. We kicked off Q4 with a lot of momentum, so I'd love to show you some trades, sort of my thought processes behind them, and yeah, let's jump in. Alright guys, so we're going to start off with the daily as always. So this is a loss. I took a loss on Euro Kiwi, 1% loss, I think on early morning of October the 16th. So from the higher time frames, we can see that we've come from a push up, sideways correction, almost like an expanding pattern to potentially move to the upside. If we just drop down to the 4 hour, we have another corrective piece. Now, you know, trend lines are subjective, you know, don't marry your trend lines, you've heard it all before. So if I was just to take this piece of price action, most recent 2 touches, what do we have here? Again, a push up, another expanding pattern, potentially move to the downside and then springboard up, but we don't know that yet. So if we just look at this pattern and just zoom in a little closer, we can refine our trend lines. Again, don't marry your trend lines. They are not really a big deal. It's more about the structure, the nature of the market. If we just pattern separate, let's have a look at this piece of structure. Now this changes again. We're just building stories. We are, you know, analyzing price, come from a push up, sideways move, potential to the downside, and then from the higher time frames we do know that we can go long. But yeah, so now we've got this sideways piece of price action. So if we just drill to the 1 hour and see what we can do about entry, we have a 1, 2, potential third touch. I also had a double top in this region here that could have coincided with this upper trend line, and we also have the higher time frame, larger structure upper trend line here. And I was looking at a trade here. I was looking at the ascending channel, and I had another trend line here. So we had an ascending within this corrective structure. So we're just really building more layers, more confluence, kind of painting a picture, building a story for your trade, because it's never really about like the market has to do this. It's about what is the market showing me, what is the market telling me, what did the daily tell me, what did the 4 hour tell me, and what are the possible scenarios that could happen, and how can I be prepared to capitalize. So we always want to be in that kind of mindset when we are analyzing the markets. We have this 1, 2, 3. Now I am anticipating some sort of retrace candle here, here, or here. What happened was I was forecasting a short with I had a 45 pip stop, and what I told myself was, okay, if I took a trade here, it covers the double top. Can I move it to break even at the bottom of the ascending? Yes, I've got 2.41 to the bottom of this sideways channel. I've got 4.73, and the potential for the, you know, if we were to hold this for a longer, and if this trade played out, was at the bottom 12.7% and a potential almost 18% trade. So the confluences were stacking up, and this is really key, and to be in that sort of forecast and analyst mindset. And now this was during the night, and I woke up and saw this retrace candle. So I had my entry just below the retrace candle. And this is another thing, is that I now let the market always take me in and take me out. So I set an entry order a few pips above or below a retrace candle, and I let the market take me in. I never execute as a a live order. I set market orders. So that is just another thing. It helps with your mentality, because sometimes you'll see a trade or like a retrace candle, and you will enter live when it closes, and then it completely just goes the opposite direction. How many times, you know, has that happened for me? So you know, just setting it a few pips below has helped me a lot, especially in the long run. You'll understand that it does kind of save you a little bit, because there's times where it has a retrace candle, you set it just below, and then it continues upwards. But in this case, so I set my order and it was just around here, and you'll see that I get triggered in by this wick. So at the start of the following hour, I think it was 8 o'clock. Yeah, 8 o'clock. Did move to the downside, get triggered in, but then it closes with that wick, and I just quickly get taken out. Now, I took a full 1% loss here, but the potential was much greater, so I was happy to take that loss. It was in my plan. You know, I would take this trade over and over again, so really there was I wasn't feeling much emotion. However, you see that the trade does continue to play out and move to the downside eventually. There were multiple opportunities that I did miss. For example, there was a 15-minute retrace, got the hover here, etc, etc. So again, missed opportunity and a loss on this end. And you know, I could show you, you know, the potential entry that I could have taken, but we don't want to be hindsight traders. At the time that this leg was forming, that there were other opportunities that were materializing that I did manage to catch. So took a loss in that, even though it played out in the end. This is a big factor of, you know, mass psychology. People think that because it breaks that trend line or it breaks this resistance line that it's gonna springboard to the upside, but you know, you see it just coming back in. You just see it coming back in and coming to the downside. So there we go. So guys, I want to show you a win with Aussie dollar long. Took it on the 17th. From the daily, we can see that we've got this descending channel, and I've also got a ray line here. If we just jump on the 4 hour, see what price is showing. Got this 1, you know, 2, 3 rejections, and so we're in this descending channel. We know that descending channels are reversals to go long, but on the lower time frames it paints a different picture, because you know, you can start saying all these different scenarios, like if we extend this trend line, it looks like we've come from a push down, sideways movement, and then we're going to come up here, then we can go long, right? So, but we want to take the piece of price action that's recent and relevant, and forecast off of that. So what you could say is we've got this 1, 2, 3 rejection. Okay, we've come from a push down, but we're also having this momentum that's climbing up. You could say it's in the fashion of an ascending channel, which is, you know, quite corrective. But let me show you my thought process. So I initially had this ascending channel. We had the 1, 2, 3 here, and what happens is this is where I evolved my trend line, because we just moved to the upside, and it was at this point that I was just seeing price sort of moving up, having correction, moving up, having a correction. Could we not capitalize on another move up? And you know, that could bank potential, you know, whether that be 4%, 5%, or if you get multiple scalings. So that was my thought process. We just zoom in a little bit. We have this sideways channel here, and this is where I want to talk about, you know, catching a falling knife or catching the reversal. You know, there's many times that I've been trying to catch the reversal, and what I mean by that is, you know, taking a trade like this in an area that is kind of in no man's land. Like, this entire piece of structure is not anywhere near a significant structure low or a significant structure high. So that is why I don't call the bottom, but what I do, and I'll show you, is I wait for the impulse, which is here. So you know, we can keep saying it, building the story that there's descending channels within the descending. On the 15-minute, I believe there was also, yeah, we go descending channel. And a impulse up is never confirmed without continuation. So what I did here, if I just remove that, was I started to build this picture for I would go long, and this is where I rein the trend line in, just because we want to take this piece that is forming. So I was seeing this just before I was going to bed for a long. Had it a couple pips above, you know, what the tight flag would look like, and I had a 20 pip stop. It's already on 20. So I had it like this. So this is when I was doing my even forecast, and then we had it pushed down, and you know, I wasn't worried. And I think I went to sleep around this time, and we shot to the upside. So that is just, you know, very clean price action, because we've got this this bull flag, come from an impulse, tight flag, entry set, at the break, stops covered to the impulse, to the upside. So my thinking was that, can I move it to break even at the double top region? Yes, that's at 2%, and almost 3% to the top. And if this was the one to break, you know, this could be a running channel to the upside. Let's see what the potential was to this high. It would have been 6%, and to the outer structure, almost a 10% trade. So that was quite a simple trade in terms of price action, because it's just descending channel within the descending here. It's a running channel. We know high time frames are pointing to the upside. We've got this impulse. We just had to wait for that continuation to confirm it. We can set the entry, get triggered in, and price moves to the upside. I did actually take another scale in here, which I'm not going to show because it's the same sort of story about, you know, if I just did this, you know, same sort of story, moves to the upside. So yeah, nice trade there, and managed to bank, let's have a look, 4.6% on the first trade. I'll just move this out of the way. So 4.6% on the first trade, and I took 4.6 and 3.25 on this second trade. Yeah, both 20 pip stop losses. Now you can tell that market is changing, market is slowing down. I believe I got taken out here, just under this. Of course, I'd evolve my trend lines and things like that, but yeah, eventually you can tell nature of the market, slowing down, sending channel. I can expect another drop, so there we go. Nice simple trade there, and that was Aussie dollar long. Hope you guys are enjoying the video, by the way. Give it a like if you are learning some new things, or if you're just enjoying me talking about the charts. You don't want to focus on your losses, you want to focus on your wins, because your wins are what are going to carry you. If you take 3 losses, right, 1% losses, but your trades, you know, when you forecast them, you are at least anticipating that this trade could be a, you know, 3-to-1. If you took 2 wins and 3 losses, that is, you know, that is 3% net profit. So it's really about game probabilities, about preparation, about sticking to your plan, sticking to your risk management. You know, we don't want revenge trading. Again, just following the probabilities and sticking to your plan is what's super key. And yeah, guys, so October was pretty cool. Right now, it's currently Friday, the 8th of November when I'm filming this. I actually show you a trade that I'm in. I don't know, live management, I guess. Kiwi CAD short. It's quite corrective, but you know, I'm being very patient with it. These lines are where I've sort of trailed them. Yeah, I'll show you a quick analysis actually. When we did break out of this channel here, we broke out into an ascending channel. So that was quite interesting. Like I said, you know, the continuation, the move to the upside or the downside isn't confirmed unless you get continuation. But we didn't. We broke out and then moved to a corrective structure. And we broke out, and there was, you know, that was a chance to, that was almost like a steep better flag to the downside. So I took the opportunity to take a short setup, and it's currently running at about almost 3%, which is all right. And I've just got about like not much locked in, but I'm training my stops with structures and things like that. We've just broken this though. I may trail it accordingly, but it's giving me signs that we could just trickle, be one of those kind of trades where they just trickle. Sometimes what I do is I look to the left and see, we could just get something that just trickles like this or like this. But that kind of price action is unsustainable and will eventually lead to an impulsive leg afterwards. So what that means is, if this does trickle, I'm ready to take long and pivot to the upside, because really on the daily, how long have we been trickling? We've been trickling since March 2019. We've been trickling for that long. I wouldn't be surprised if the next few months or in 2020 that this could move back up to the upside. We trickle here, we move back up, we trickle here, we move back up, and it's just, the markets are showing that, and markets are paving the way. So just waiting for that, and just being patient with this, really. Markets have been corrective. We've had quite an impulsive October, so I'm not surprised that they're quite corrective at the moment. But yeah, these are the times where you sit in your hands, go through some content, and yeah. But guys, I hope you enjoyed that video. Hopefully it was quite insightful, or whether you just, I don't know, I get some weird questions that you guys just like seeing me and talking, like hearing me talk about the charts and things like that, which is pretty crazy. But hopefully you took some value from that. I think some key things is just to be able to really review the trades you've taken, understand what you learn from it. Even with your wins, you can learn a lot, especially because you want to keep focusing on the wins and not the losses. So don't just take losses as lessons, but take wins as lessons as well, and see, okay, what went right here. Focus on what went right, what could go right, rather than what could go wrong or things like that. But guys, I'll see you in the next video, and let me know down in the comments what you thought of it.